Zero. Hey, everybody, we're back. Heat Podcast. Matt's not here today. Again, he should be back next week. Got some good guys on next week talking about space. Got Jeremy Vreeland, one of our options traders, options expert, and the infamous Markus Heitkoetter. Did I get that right, Markus?
Absolutely, you got it right. Awesome.
You know what? Just so everyone knows here, Markus was born in Munich, right? One of my favorite places. My wife grew up in Germany. My kids have German passports, right? Spent a lot of time. I had my wife on the Tegernsee, right, up by Munich, right?
Yeah.
Love it there, et cetera, et cetera. So, a little bit about Germany. Markus, so why don't you tell us what you're all about? Why don't you start with how you got to where you are today? And then why don't you dive into the wheel strategy a little bit? Tell us about that. And maybe we can pull up some specific ideas. Jeremy has the charts. He's the chart guy. You must use charts a little bit. We'll go into all that.
Fantastic. Yeah, absolutely. I mean, how far back do we want to start? I mean, I started trading when I was still in high school, and this was 1989 in Germany. Now, this is where we didn't have computers or real-time quotes. And if you wanted to trade, you had to go to a bank to open a trading account. I mean, we didn't have interactive brokers or any of the online brokers, right? So I went to Deutsche Bank, which is, of course, the bank in Germany. And I said, hey, I want to open a trading account. And I mean, I was a high school kid. The guy looked at me and said, really? I mean, yeah, please. I want to trade. I read a book and I want to trade. And he said, well, how much money do you want to put in the account? And I said, well, all of the money that I've saved so far, which is 50 Deutschmark, kind of like $50. And he said, no, I can't do this. Anyhow, I convinced him to open an account with 50 Deutschmark. And then he said, okay, now the account is open. So what do you want to trade? And I said, what can I trade with 50 Deutschmark? So this is where he said, well, you can actually trade one share of VW, Volkswagen.
Sweet.
And that's how I got started. And so
really?
the next morning...
I think it was more like $85. I think the exchange rate was 1.7, by the way.
I know, something like this, right? The next morning I had to go to school. And I mean, we didn't have cell phones or anything like this. 1989, this is way before all of this kind of stuff. So this is where I ran to a payphone, entered my 20 cents and called the banker. And I said, how are we doing? And he said, well, we're up to 50 Deutschmark and 20 cents. And I said, whoa, this is working. So during the second break, I called him again. And I said, well, we're up to 50 Deutschmark and 40 cents. And as soon as I got home, I called him again. Where did we close? Where did we close? Am I making money? And I said, well, it went up 50 cents today. So yes, we ended up at 50 Deutschmark and 50 cents. Next day, the same thing. And on the third day and my seventh call to the broker, he said, dude, Markus, how much money do you want to make on the stock? I thought, oh my gosh, I invested 50 Deutschmark. If I can make 10 Deutschmark, that's 20%. That would be a lot, right? So I said, I want to make 10 Deutschmark. And he said, done deal. Come to my office. I give you the 10 Deutschmark and stop calling me. So my first trade. And this is where I also realized that is probably not a sustainable trading strategy.
Right.
I
had accounts
all
like
got
that.
started way back in the day.
Right. Okay. So you're a young kid, started trading, Munich. How'd you get into the wheel strategy? I mean, you're kind of a famous guy. You have some followers. You have you have a webpage. All that. How'd you get to there?
Long story short, I first got a real job because, I mean, this is what I couldn't trade on 50 Deutschmark, right? Started working for IBM. 2002, got burned out working for IBM and decided, you know what? I want to give it a shot becoming a trader. So moved to the US from Munich in Germany with $30,000 in my pocket, $20,000 I put in my trading account, and I thought, oh my gosh, I'm going to be a millionaire in no time. Well, I made all the mistakes. First, I was trading stocks, and I thought, oh my gosh, all I need to do is pre-market, look what stocks are moving, and then I'm jumping into this, right? Easy enough. Well, didn't work this way. I honestly, in the first few months, I was just gambling. I was doing what most traders do, chasing the unicorns, right? I mean, I didn't know much about options trading then. And in fact, instead of moving from stocks to options trading, I decided to detour of futures trading. So I did that for a while because this is where everybody said, oh my gosh, you have all this leverage and all you need to do is 2 points in the E-mini S&P and that's already $100 and you just make this every day and it's super easy. And oh, well, not easy. Anyhow.
This is where the Widowmaker story comes in, right, Jay?
Right.
All right, go ahead.
So it took me a while to get around to options, and it wasn't until I want to say probably around 2017, 2018 when I really got burned out with futures trading. I mean, I loved it. I was doing okay as a day trader, but then, gosh, I'm getting older and I'm getting too old for day trading and watching these 6 monitors and watching the ticks. I was literally trading on tick charts.
Right.
Anyhow, this is when somebody told me about the wheel strategy. And I thought,
Right.
what is that? And I looked into this and he said, well, basically, you make money either way, right? I mean, you make money when you're selling put in the beginning, you're making money when the stock goes up, you're making money when you're selling calls. It sounded like, what can possibly go wrong, right? And so
Okay.
this is where I started looking into this, but then I thought this kind of sounds too easy.
Right.
So back in the days, you know Larry McMillan and his Bible on options trading, the 1,200 pages or something like this, right?
Right.
Options and strategic
I
investment.
read that every
I
night.
have a copy.
No.
I know, we all have, right? I mean, this is great. I read all of the strategies, and this is where I thought, okay, maybe I got to do this delta neutral strategies and all this kind of stuff. So I made it super, super complicated. And this is when I realized the more complicated I make my options trading, the more mistakes I made.
Right.
And this is where
Great.
really I started going back to the basics and said, you know what? I really like this idea of the wheel strategy. So I've been trading this for quite a while. I'm still loving
Okay.
it.
Okay, so I'm just going to jump into some of these questions here then, right? And
Yeah.
Jay, we're going to bring you on here when we get into some specific names, right? Again, so the wheel integrates selling cash secured puts and then cover calls. How would you explain its core value proposition to someone familiar with options but not this strategy? Like, why do this, basically?
You see, Pat, that's a great question. And one of the big misconceptions is that the wheel strategy is an options trading strategy. It is not. From my perspective, it is a stock trading strategy because the idea here is that you're selling puts to buy a stock below the level where it is trading right now. But the intention is to buy a stock. If you didn't want to buy the stock and you wouldn't get assigned, you couldn't sell the calls. And that is part of the wheel strategy. It consists of 3 phases. Number 1, selling, as you said, cash secured puts. Number 2, getting assigned a stock if it drops to a price level where you're comfortable buying the stock. And then you're selling covered calls against it. If you don't want to own the stock, you shouldn't use the wheel strategy. You can use spread trading, which is absolutely fine. You can use credit spreads, debit spreads, all of the put credit spreads, all of these kind of things. And I think this is one of the misconceptions where people think, oh, that's an options trading strategy. But in fact, you want to own stocks. Otherwise, the wheel strategy wouldn't work. It would be half a wheel. It would be a third of a wheel. It would be like, but, pottering along.
Perfect. Anything to throw in there, Jay?
I mean, that's kind of, starting out exactly where I got into it. And it's funny that you mentioned, 2017 is when you started going into options, because that's actually when I started trading altogether. So I haven't been in it that long. But I quickly learned a lot about options, and I found that the more I learned, like you, the more mistakes I would make. But when I discovered the wheel trade myself, I was like, why haven't I been doing this with my life? I mean, this is an income strategy that just keeps on giving. So I've learned it very well, and I've taught others in the past how to do it, and they're pretty happy with it too. So.
Okay, so I'm going to go back to the list here. So this is from Markus, sir. You often speak about consistent income versus speculative trading. How does the wheel manage that balance? So, like, I don't know, how would I phrase this simpler?
Well, Pat, here's the deal. I mean, I started buying options, right? And when we buy options, this is where the way to make a lot of money is you buy cheap out of the money options, and you just hope that they're getting into the money and they're exploding. So you buy something for, I don't know, 10 cents, 20 cents, and you hope that this goes up to $1 because then you make like 5x. That is fascinating. Now, this is highly speculative from my perspective because you are betting on a directional trade for the stock. So this is why I love the wheel strategy because kind of as I said, you're selling puts below the current stock price with the idea of buying the stock when it drops. But this means that now you're benefiting kind of from 5 directions, right? So if the stock moves up, you keep the premium and you just do it again. If the stock goes sideways or not going anywhere, just a little up or a little down, you still keep the premium. And if it goes down and you get a sky and you buy the stock at a discount, then you can start selling covered calls. So this is where I just believe, instead of just having this one direction, which means the stock has to shoot up and kind of go to the moon, that an out of the money option gets in the money, right? And you make money on it. Here you have more nuances, how you can play the market. And that's what I love about it. That's why I personally feel the wheel strategy is a more conservative approach.
Okay. Last question. We're going to get the charts and all that. So, I did not know about the wheel strategy really until I met Jeremy, right? Learned a lot about it. Makes sense, yada, 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 right? So I've also then I do a lot on social media. I think I've seen the wheel strategy come up a lot of places on social media, right? A lot of people talk about it. You seem to have the best handle on it for what it's worth, right? Where you talk about it in a real way, if that's the right way to say it, the real way. So what misconceptions do you see new traders have about the wheel based on your, what you see online? Like, is there anything that you look at and you go, oh, this is BS or anything?
Well, there's two things. First of all, you get a lot of premium if you're trading volatile stocks, right? So if you're trading meme stocks or highly speculative stocks that have a lot of implied volatility, you can collect a lot of premium. And this is what is blinding many traders, where they say, oh my gosh, I can just get a ton of premium for getting assigned 5 or even 10% below the price, not knowing that it is very likely for a stock, or even worse, leveraged ETFs, to move 5 to 10% in a day. I mean, this is where some traders like to trade the wheel strategy on leveraged ETFs like TQQQ or SQQQ, right? And the higher the leverage,
that's what Jeremy does, by the way. So you don't want to say anything too negative.
No. I mean, it's absolutely fine. So this is what brings me to the next point, right? You want to strike a balance, because if you only go for, let's say, the cubes or the S&P, the SPY, they don't move enough to get a lot of premium. Now, indices are great because, I mean, how many times in the last 100 years did the market recover from a crash?
Right.
Every single time, right? So this is where indices are actually one of the safest way to trade the wheel strategy. However, and this is where exactly, Jeremy, probably what you do, if you would just trade the standard indices without any leverage, this is when it gets super tricky to get enough premium to make it worthwhile.
Right. So, okay, so let's just go right to one here. Jay, why don't we start with Jeremy? Jeremy, you talked about something last week. You were doing like the triple Q, whatever.
Yeah,
Are you still in that trade?
I am still in that trade.
Want to pull that one up and let's talk about let's see what Markus has to say about this. We'll grade Jeremy on an A, B, C, D, E, F, and don't be afraid to give him an F, by the way. All right, let's just see. Okay, so Jeremy, tell him what you're doing.
So you have QQQ here, and you can plainly see the price movement, but TNA is not on that index. The TNA is more on the Russell 2000, but it's triple leveraged. So
you're doing the TNA on the Russells 2000.
Yep.
Okay.
So the premium income is pretty great on it, but you've got to be willing to take on positions in very broad ranges. So like when I was getting into this recent trade, as I talked about before, I was looking for an equal move to this move coming out of this breakout, and now we're slightly above it. So I was looking at 60 and 61 strikes at the time, and I was able to also trade those intraday. So I was able to buy to close and then rinse them again. And when you have something that moves with a broad enough range and you're keen on price action, you can actually make a lot more than just the premium of selling the option to open.
Okay, so Jeremy, slow down, right? So this is TNA, which is triple the Russell 2000, correct? And you have already, what you're talking about is putting on a short call trade at this point? Is
Correct,
that what you're saying? Because you just have to clarify what you're talking about doing here. The stock was where, or TNA was where, and you were going to do what where?
So when it started breaking out, I started selling covered calls on the highs of the day.
Yeah.
And then the next day, I would buy to close when it would come down into a lower range, and then I would go and sell it to open again on the higher range. So I was taking advantage of the swings in the price during the intraday chart and collecting a little bit more premium a little bit at a time. And oftentimes I'd rinse the same strike, or I'd move the strike and roll it further out.
So I'm just looking at it. I'm an outsider here, but it strikes me that the stock keeps moving higher, and you're selling calls against it, right? So how is that helping you, or how are you avoiding getting your Can I say ass on here? I'm going to say it. How are you just say getting your ass handed to you if the stock's going up and you're selling calls?
I'm willing to sell it at that price because it's going to be, in the range of a pretty lofty high if we look at the weekly chart. I mean, it's kind of looking for a move to about a reversion here anyway.
Okay.
So I'm okay to take profit there because I would expect it to probably resist that area.
So you're
and come
long
back
the
down
stock,
eventually.
you're taking in some premium, you're getting rid of the stock as it goes higher. Fair enough, done. Does that make sense to you, Marcus? Well, is that kind of the idea here, or what? Any thoughts?
Yeah, you see, that's the beautiful thing about the wheel strategy. You can tailor it to many, many ways.
Yes.
So you can trade trending stocks with it. I personally love to trade sideways trading stocks with it, just because I feel it's nicer if they move in a range. And again, my goal is to get assigned and then say calls as they revert back to the mean. But pretty much similar what you do, Jeremy. The main difference is that I personally like to trade multiple stocks, so I'm not married to one instrument. And I know it's just great if you tailor the wheel strategy to you, where you say, you know what, I'm just loving the Russell and I'm loving this leveraged one, and I just learn how to trade the wheel strategy. I learn how this moves, and then I get a feel for it, and then I know exactly how to trade it when it is moving higher, how to trade it when it's moving lower, or when it's going sideways.
Okay,
so
this
yeah, go ahead.
This brings us back to what you said earlier, right? And I kind of moved on thinking, but you've raised the question earlier, so I'm going to bring it back. So, there's kind of you said something, there's kind of a, give and take. Do you trade the, volatile names, or do you trade the names that trade in the range? So how do you make that choice? I mean, it feels like you're saying you want to trade stuff that stay in a range. Jeremy wants to trade a little bit more aggressive. How do you, I guess trading by nature, trading in a range is a little bit more manageable, a little bit easier on your heart, et cetera, a little bit, less volatile. Is that the nature of why you do that?
This is where you see people ask me all the time, what's the best trading strategy? Pat, the best trading strategy is the one that lets you sleep at night.
Right,
if you're
yes.
waking up in the middle of the night, staring at the ceiling and wondering and worrying about your portfolio, you have the wrong strategy, right?
That's the right answer. Yeah. Okay.
Right. And this is where you see, for some people, they say, you know what, I'm choosing one instrument like TNA or TQQQ, and I'm trading a strategy based on this. What I like to do is I look for certain patterns, and then I say, I don't care what the underlying is, as long as it is a solid stock or ETF and not highly speculative.
Okay, so I got you. Okay, so let's move forward. So this leads to the next question. When selecting stocks or ETFs for wheeling, right, we'll call it, what, quantitative criteria are non-negotiable? So, yeah, in essence, you're saying you want it to be Jeremy apparently will trade anything. But what will you do? Where are you at?
I'm German, so I need rules, right? I mean, that's what Germans do.
Right.
For me, for example.
The trains in Germany are like always on time to like the nearest second, man. It's like insane, I got to say.
Well, not anymore. It used to be this way.
All right, my bad. All right,
one time.
so,
Anyhow,
okay.
yeah, but we Germans, we love rules, right? So for me, for example, I like to trade stocks that have a PE ratio of less than 50, the price to earnings ratio, right? Right now, the S&P 500, we're around, 26, 28, so that's kind of the norm. I like to trade stocks that are not crazy overvalued, right? That's kind of in line with the PE ratio, what everybody is looking at. I like to see a market cap of more than 5 billion, which means I don't trade small cap stocks. I don't trade micro cap stocks, right? I trade stocks. Recently, I traded Schwab, Procter and Gamble, right? TSCO, Tractor Supply Company, names that everybody knows. I like companies that pay a dividend. And here's why. When a company pays a dividend, it's typically not a growth company anymore. It's an established company that gives back part of their profits to their shareholders, right? So that's what I like to do. So these are the things that I'm looking for.
Can I ask you a question real quick?
Go ahead.
Like, what do you do with dividends? I mean, it goes into your cash account and you fund like your next purchase. Is that kind of what you do? Or is there some other kind of thing that you
No, you see, because most dividend payers these days, they're paying 1 or 2%. It's just a matter for me, if they pay a dividend, they're typically out of the growth phase, right? I
I
mean, a
see.
stock, when they start publicly
Okay.
trading, in the beginning, they're in the growth phase. They try to raise capital. They put all of the money back into the company to grow aggressively, typically at a loss. And that's another thing, right? I look at companies who are posting quarterly and annual profits, and I want to see that at least 4 out of the last 5 quarters were profitable and 4 out of the last 5 years were profitable. So this is where I don't like to bet on stocks that are all over the place and have hit and miss quarters. I just like,
Can I ask
because
you a dumb
ultimately
question?
I might own the stock. Go ahead.
Dumb question. If you put this, you know, these parameters, which are 1, 2, 3, 4, 5, I think I counted, on like the S&P 500, how many stocks would there be in that? Do you know, in that basket?
Right now, in order for me to look at stocks, I'm looking at 8 right now.
8.
8.
8. Can you give those names, or you can't do it? Or
No, absolutely. I mean, can I share my
okay,
screen?
yeah, okay, sweet. Oh, if you can share it, can he take over, Jay? I mean, I don't know. I'm not the tech guy.
Yeah, let me stop by.
All right.
He should be able to share.
Oh, there he is. Okay, let's
I'm
see.
going to
Well,
turn this bright chart off so
exciting.
I can see.
So,
there
me
it
see.
is. Oh wait, can you blow that up, Jay, somehow? Oh, there it is.
okay,
Sweet.
hello.
Okay,
This time I have to probably.
no, that's it. You don't have to do much more. I mean, that's cool. We can see
Okay,
it.
cool. So here's the filters that I'm looking at. I can
Okay.
probably zoom in a little bit, right? So where
Yeah,
I
sweet.
say, okay,
So you like MicroStrategy? Is MicroStrategy on your list, or this just have? Oh,
well,
no,
this
never mind.
this on the list because it fits the main criteria, which means that okay, they have a low PE ratio,
Oh,
right?
wow.
They have a nice market cap, but now what I want to see is okay, what does their income statement look like? And I say, oh shoot, no, this is where I said 4 out of the last 5 quarters they need to
Oh,
be
I see.
profitable, and boom, this is how they're
Chop.
falling out of this.
Chop,
That's
chop.
why you see I flagged it in red where I
Oh,
say no, thank you.
you put a frown on there.
I put a little frown on there. Exactly.
What is like the skull? What's that? That's like death. Don't
The
don't
skull
that's
is for me a never. So for me,
never.
I'm staying
Yeah.
away from super microcomputer. It's just not a company that I'm comfortable with, and it's mainly when I see a stock going wild and crazy from here,
Right.
$30 to $120.
Right.
Back to $80, back to $20, going up to 65. That's a little bit too wild for me. This is where we talked
Right.
about the volatility, right? This is where I'm more like a boring guy. So, for example, I love a Schwab. I just traded this the other day, right?
Right.
As you can see, Schwab nicely
tight
trading
range.
between 92 and 98, right? And then
Right.
breaking out and now trading at the next level between 100 and 105, right? So this is where it doesn't go too crazy. This is 5% swings or 10% swings.
Right.
And these are stocks where I say, look at this quarterly statement, look at this annual statement.
I like
So
this
that's
one.
something. Yeah, Procter and Gamble, PG is another one, right? That I like to trade.
Why
even
this?
though, yeah, even though it's moving lower, right? It's moving lower and then bouncing right back, and moving lower and
Right.
bouncing right back, moving lower and bouncing
Easy
right
range to
back,
trade.
right? So this is where
Do you ever look at
I'm
this?
a little
I
bit
mean-
more of a boring trader.
Okay, so do you ever look at it and go, "Oh, what does Procter and Gamble do?" or not really? Yeah, you
Well,
do. Or you
again,
just
this is
a
where
little
I
bit?
kind of. I kind of want to see they pay a dividend. Look at this
Right,
2.8
okay.
dividend yield, low PE ratio of 21. Let me just blow this up a little bit. Market cap of 344 billion, and let's see. Whatever they do make money.
So
Look
it's
at
more of
this,
a
they make money
quantitative approach than
solidly,
a
right?
kind of a qualitative approach. Yeah. Okay. Cool. I mean, I like it. I mean, I like these companies. I like. Okay. All right. Jeremy, that's your dog, or is that,
Yeah.
is that someone else? All right.
That's my dog.
All right.
I love to trade stocks that are in a range too. And then I wanted to add, like, one of the benefits of trading a dividend stock is that they tend to trade in a range because the company's not really all that interested in growth, and they'll tend to swing in a fairly nice range. One of the first stocks I did wheel trade was back when AMD was trading between $9 and $11, almost on a pendulum that was exact, until it started to break out. I ended up getting out a little bit above the range there with $12 covered calls on that one, but it was such a predictable range that it was very easy to wheel trade. I do trade a little bit more aggressive stuff as well. just because I love a little bit of a kick. It's exciting. Plus, leverage is something that you can also find sometimes. Some leverage ETFs can trade in a range as well. If the market's just dragging on, waiting for news to kind of guide things.
I mean, look at TQQQ or the cubes.
Yeah.
I mean, since the beginning of the year, not a whole lot of movement there.
That's been a nice range.
Yeah.
Right, I see. Okay, so let's move on. So, Marcus, in practice, do you typically roll out a put or cover call rather than letting it expire? I mean, do you cover, or do you let it? Your goal is to let it expire.
No, first of all, when I sell a cash secured put, my goal is to get assigned. So I either let it expire or I'm getting assigned, right? So that is the goal. With covered calls, I must say, if I can get nice premium on Friday to roll it, I'll go ahead. But I typically do it for the same strike price because rolling up usually gives you just a little bit of a premium. So I'm just extending the trade for another week. And that's another thing, Pat. I love trading weekly options.
Same.
Weeklies?
My favorite.
Right?
Weeklies, you said?
Weeklies are the
got it.
bomb.
Weeklies. Because for me, it gives me more control. For me, it's easier to say, where might a stock be by the end of the week than where might it be on the third Friday of February? That's a long time from now.
Yeah.
Right. Okay. No. I get you. No. I mean, we have a series of funds that are dealing with zero DTE related. So, as a whole, we take it even one step farther at Total. I mean, we've talked about this. That's a different discussion. All right, but but we're in the same spot. Trust me. All right. So, Jeremy, any thoughts on that one before I move on? That's kind of your thoughts too. Same stuff.
I mean, you can also there's ways to do this with a synthetic long, the old poor man's covered call strategy, where you're not necessarily going to take possession of the stock, but you literally buy the long position right off. And I've done that with equity as well, and it's not always the smart thing to do unless you're expecting
Buying the long
breakout.
position means you're buying the call.
Right, you're buying a call that probably expires in 6 months or more, and then you're selling covered calls against that call.
I see. Okay. Yeah, I get that. That makes sense. All right. So, we may have already said this, but how do you decide whether to accept assignment versus manage the position differently? So you're always accepting assignment. If it comes, you're taking, yeah?
There's only one exception to the rule if something has fundamentally changed. So let's say that...
what would change in a week?
Well, you would be surprised. Usually it doesn't.
Nothing usually.
Right? But let's say that I'm trading Tesla, and then news come out that Elon Musk is out. All Teslas are banned in the U.S. Right? Then I don't want to own that company anymore. But as said, within a week,
I'm going to go off script here again. You just mentioned something. So do you think about tail risk at all? Like that's one of our kind of things we talk about around here, right? Tail risk. Do you talk about that? Not really.
No.
Okay, good. All right. So,
do have a little tail risk thing that can help cover things. The best thing about options positions is they're very adjustable. So even while you're wheel trading, if you suspect that something's going to be fundamentally changing in the near future, or possibly going to fundamentally change, you can hedge it still because you can convert that strategy into a collar strategy very easily, especially if you're already long equity.
Right, but that kind of falls into what Markus was saying. Gets a little complicated now.
It does.
I mean, yeah. I feel the same way. Like once you're putting on like a fourth leg, it's like, dude, I'm not going to do that.
Yeah.
All right. Anyway, moving forward.
Sometimes it's easier to just close it. I mean, if you sold a put and it's going against you, and you say, "I made a mistake. I don't want it," you can close it as a loss. I mean, it will not be a devastating loss.
Right. Got it. Yeah. Okay, so how much of the wheel should be mechanical versus discretionary? Can you totally systematize it? Is that the right word? Systematize it. Yep. Can you systematize the wheel? Or do you have to sit there and do it by hand?
I believe it might be possible. You see, I like to have the rules where I'll look at different stocks, and then I still like to look at charts. And I know that we are getting better where AI tools can read charts, but for us humans, it's super easy to look at a chart. I mean, we looked at TNA, this is going up, right? We looked at Schwab, this is going sideways. I mean, it takes us a split second. So for me, it's easier to quickly look at 5 or 6 charts and make a decision than fully automating it.
Yeah, I got it. Okay, good.
Once I am in a position, then it's easy because I want to see 30% annualized as a premium. So I kind of know what my minimum premium is. And that's the cool thing is with options, you put a limit order in the market and just wait until it gets there, right?
So I'm just going to throw this out at you. So when you're establishing a position, let's say, is it kind of more of like an art form in the sense like okay, this one feels right, I'm going to short to 38, weekly. But is that kind of how you look at it, or is there some other, technical or quantitative way of looking at it?
Again, for me, I'm German. I need rules. So
Yeah.
this is
What are
where
the
when I
rules?
see, for example, that something is in a range,
Yeah.
I want to sell calls in the lower 25% of the range.
Right.
Sell puts, sorry. Sell
Right.
puts in the lower 25% of the range. Because this way I'm getting assigned at the lower end of the range, and then I want to sell covered calls as we go back towards the 50% level of a range, right? So this is where it's a little bit more mechanical, but I haven't fully automated it because kind of, Jeremy, like you, I like looking at the markets. I like getting up in the
Right,
morning. I live in
absolutely.
Central Time Zone, so for me it's 8:30, having a
Right.
coffee, firing up some charts. I'm looking at it for maybe 15, 20 minutes, and that's it for me.
Got it. Yeah. Okay, cool.
Just
All
make a
right,
plan
good
right
enough.
on that.
All right, so, what do you do about position sizing? Is that something you kind of deal with, work on?
For me personally, I like to have up to 5 positions in my portfolio, and I'm watching the correlation. So what I want to see is the 1-year correlation between these stocks is less than 0.65, which kind of means, right, a correlation of 1 means that they're moving exactly the same, right? A
So how
correlation
do you
of
how do you monitor that? You have something. It's just simple to do.
I'm
You have
using the software that I use is the PowerX Optimizer. There's probably a lot of correlation tools out there that you can
I see.
subscribe to.
Okay, so you put on 6 positions, right? Or let's
5.
just say 5. Okay, 5. My bad. 5, and you somehow input these positions into the software, and it kind of feeds you. You can show me if you want. It
Yeah,
feeds you
I'm
some
very happy
information
to.
back
So,
that does what? I'd be interested to see.
right. So let me just share my screen so that you see
You
it.
can pitch it here too, if it's
Oh.
$9.99 or less. I have
That's
cubic
okay.
zirconium too. I'm going to start pitching in a minute.
There you go.
Let me just go here.
No, but seriously
So-
though, you can talk about it if you want. I'm cool with that.
No, that's fine. You see, this is where I have the asset correlation, and then I'm
I
looking
see.
at the positions that I'm in, and I'm looking for a correlation length of a year. I mean, you can go crazy and go 2 years.
Like this.
Right, and this is where you see if they're not very correlated, if they're below 0.5, they don't have a strong correlation.
Right.
Now, if you
So,
think
let
about
me ask you a
something like
question.
this, where we take,
This-
for example, CVX and XOM, right? I mean, these have a pretty high correlation, Exxon and Chevron, right, of 0.3.
Right.
So this means if I would have these 2 positions, it's almost like doubling
Exactly.
up in a position.
So you just
right?
do it manually like this, or this is kind of like your, it's like not toy, I hate to say, but you enjoy doing this and you're adding the stuff and you're kind of messing around with it. This is kind of how it works.
That's what I like to do. And I mean, this is where now we have our little Rocky, which is our AI tool that can look at all of this for me so that I can
Oh,
just
yeah,
say,
yeah. Okay.
yeah, hey, check the correlation between these, and then I'm getting just a response back. So we're getting to a point where the AI co-pilot can take more and more of the manual labor out of this, right? And this is what I like to do.
Okay, so since we're on here, so you are the CEO, you established Rockwell Trading. Is this software part of Rockwell Trading's package, what you guys offer? Is this not?
Yeah, this is where you see back in the days, and then we go back to the screen. But back in the days, we offered education, and then we realized nobody wakes up in the middle of the night and says, "I wonder where I can buy more DVDs," and that's what we did.
Right.
back in the
Yeah,
days.
yeah. No shit.
This is where we realized, I think 8 years ago, that people want tools that make their life easier, right? And I
Right.
mean, this is what we're used to. I mean, this is where we have phones right now. We have all of these apps and tools that make our life easier. And that's where we started developing the software. And at first, I just did it for myself, and then I showed it to other traders, and they say, well, we like it. And now we have been developing it for the past, I want to say 6, 7, 8 years, don't know exactly. I invested a few $1 million in it. So now I want to say Rockwell Trading is becoming more of a fintech company. That's the fancy word for it, right? Where you have a tool, a software that assists you in making smart decisions.
Okay, so I'm a trader, or regular Joe. How much is this going to cost me if I wanted to set up shop? Let's say I'm a regular professional living in wherever.
We have
Topeka,
monthly
Kansas.
subscriptions for $247. We have annual subscriptions for $2,000, and we even sometimes do lifetime deals where you just pay a one-time fee of $2,500 and you have it forever.
Okay, so then another question. So do you have trading, accounts established, or do you have some kind of custody, or is the trading? If I had an account, I'd have to do my trading away, or can I trade on the screen with you guys?
Well, so we integrate with different brokers where
see.
you can
Okay.
trade out of the software in your broker account. If we haven't integrated with your broker, which I don't know what it might be, right? Then you
Schwab or
just
whatever.
get the signal and you enter the options trade into your brokerage platform. So you can do it in any account, right? And we are not trading the money for you. I don't believe it.
I understand
I
that.
don't. This sounds like a
No,
a
no,
job.
I
And
understand.
know
I
that you
understand
do
completely
this.
what it is. I mean, I think it's a
For
good
you.
idea. I mean, I think that it's not like a lot of money. I mean, considering, for everyone who's out there that does not a professional, I'm not really clear of the exact price anymore. But like most pros have like a Bloomberg, and I mean, it's nowhere near 299 a month or 249 or whatever. It's
it's a
10
lot
or
more.
15 times that. So I'm not sure this is as good or better or whatever. But for what it's
I
worth, it's a
believe it's
pretty
much
decent
better.
deal. You know what I mean?
But I'm
Let's say
biased.
it's better. It's a
I
lot
created
better.
it.
You know what I mean? All right, Jay, any thoughts on that?
I mean, as far as platforms go, a lot of them are being able to integrate with API access to different brokerages. So that's a really
That's what you have,
brilliant
right?
way to
Yeah.
build
Yeah.
this.
Okay. All right. Fair
And
enough.
the best part is you can actually, I mean, you really would rather not automate things, but if you can have a process that you build, you can build your own process on that platform, and it can really help to keep you within your bounds of the rules that you set. So I really like that concept.
Yeah.
I
So
mean,
what we do, I'm a big fan of trading plans. So I believe that
Yes.
every trader should have a trading plan. And for me, there's actually just 4 main sections in a trading plan, which
Tell
is
me.
what are you going to trade? When do you enter? When do you exit? And what's your money management and position sizing, right? I mean, these are 4 key elements. And if you describe this in sections, and this is where if you put this trading plan into our software, then our AI co-pilot can find the stocks that meet your criteria, right? I mean, this is a great thing where these days you don't have to skim through lists as we had back in the days, the watch lists or the pre-market lists or the movers, right? Now you can really have software and AI do a lot of the work for you. However, you need to tell AI what it needs to do. So you need to have a trading plan. And again, AI can help you to do a trading plan, but you need to have a rough idea. If you just say, hey, give me a plan to make as much
Right.
money as possible with no risk, right? I mean, it's probably not a good output. But if you say, hey, I
Yeah,
want to
you're gonna
trade a
break
wheel strategy, I like to trade it on blue chip stocks and help me define a trading plan here. That's absolutely what our Rocky, I mean, we're Rockwell Trading, so we called our AI Rocky, what Rocky can do for you. And then once you have a trading plan, you can score it. And if it scores above 70%, this means it's good enough that you can start trading it in the market or using it.
Yeah, I mean, I like it. All right, so what realistic return expectations should traders set if they're disciplined? Like, if you're going into this and you're doing okay, what do you think? What's a good number? Like what should you be gunning for? That's a
I
realistic
think I'm a
question.
little bit more on the conservative side
Yeah.
here. So for me, what I'm looking for when I establish a trade is that I want to see 30% annualized return. So I'm shooting for 30% a year. Now, you can use margin, and margin is a double-edged sword, right? With all disclaimers, can work for you as well against you. You
Right.
can use leverage, so you can bring this up to maybe 50 to 60%. And I believe that this is realistic. And every trader is different. Some traders like to trade it more conservatively, others trade it more aggressively, make more money. But that's how I like to look at it. I like to see the 30% annualized.
So where you at with that, Jay? And let me just tell everyone who's listening. I mean, Jay's a pretty humble guy. I don't think he's going to say something that he, I don't know Markus
Yeah.
very well. We've just honestly just met, but Jay's really humble. He'll cut it straight. So I know what his ideas will be pretty fair. So I'm just going to preface all this by saying, Jay, I know. Let's hear what he has to say.
I mean, I'm pretty much in line with 30%. That's a pretty manageable way to look at it. Because if you start getting a little bit too out ahead of your skis, you start looking for 100% returns and stuff like that, you tend to kind of lose sleep, so to speak, because the stuff you're going to be trading is going to be ultra aggressive. I mean, TQQQ is pretty aggressive as it is, and so is TNA. But I mean, I've gone and set that same goal to even those, where I can pretty much consistently maintain a really good eye on the stock. And the first thing I ever learned was price action and technical analysis. So that's a huge factor for me. I can pretty much plot out about where I'd be comfortable. I'd put targets on the chart and be like, okay, I'm going to trade from here to here. What's my yield if I'm selling options on this?
Right. Yeah. So I would just say, I mean, I know Jay pretty well, and I think he's very disciplined. But I also think he has, he approaches it from a psychological perspective that is calm. You know what I mean? And I think he looks for the calm, and I think just naturally avoids the uncalm. You know what I mean? Which is what I like. All right, moving forward. So,
To add to this, based on my experience, right, the more money you want to make, the more risk you have to take, and it almost feels that there's a one-to-one correlation between the goal, how much you want to make, and the possible drawdown. At least for me personally, this is where I say, if I want to make 30%, I should be prepared for a 20 to 30% drawdown, right? So if I want to make 100%, this basically means that I would wipe out my account, right? And if you want to make more than 100%, and that's why they say that a lot of traders lose money, because I feel that a lot start with small accounts like $1,000 and want to turn this into 10,000, into 50,000, and that's very aggressive, right? And I don't know, Jeremy, what your experience
let me
is.
ask you guys a question.
For me, kind of how I like to see it.
Okay, so how do you let's say you could look at some of these TV shows that have traders, whatever the Billions or whatever that one was. They had a trading psychologist on staff, These shows are great. I love that because you get to talk to the trading psychologist. So most people don't have that. So you're kind of gaming this you're talking to yourself, so how do you make those kind of I don't know what the words are here, but how do you make those soft choices yourself? I mean, you're telling me one thing to do, Jeremy's telling me something else to do. How do I I don't know what the words are, but how do I manage that? Jay, maybe you?
So ideally, I would say start with what you can manage. I mean, you can't trade $100,000 trading account with, $5,000 worth of experience. It's just not going to work out for you.
Right.
But me, I started with basically nothing. I mean, I started with less than $50. This guy started with 50
Do you talk to anybody? Do you have your confidant or whatever? How about you, Markus? Let me ask you, Jay, because I know Jay does because he talks to me, so at least he's got one. How about you, Markus? Do you have someone you talk to, or how do you deal with the flows and the choices and the
So I have a small group of traders, and we trade together in the mornings. And
I see.
This is just fun, right? So this is where me and my head coach, Mark Hodge, we just talk, and there's a few dozen traders that we are mentoring. And it's just fun for us because this way I'm talking out loud, and just trading in front of a group is kind of holding me accountable, because if I do stupid things, then I have 2,000 people say, why would you do that, right? So
right. Okay.
that definitely helps to have trading buddies.
I agree with that. I think that's
informal.
I think that's another thing important to say. I think if you're going to hit this stuff, you got to find some people you can talk to. It's a lonely biz if you're not talking to somebody. All right, so
they say you want to surround yourself with people who are successful, and then you will, eventually get rubbed off to where you can actually become successful.
Yeah, I mean, just somebody, I think. All right, so
somebody with experience.
What conditions don't favor the wheel and might lead you to a pause or just approach? It's like getting to the last questions here, so it's the last one almost.
I mean, honestly, when markets are going completely crazy, I mean, the tariff tantrum last year, for example, where you have just so much uncertainty, where the VIX is just spiking like crazy. Sure, you have great opportunities, but this is where you have also lots of uncertainty. So
Yeah.
I want to say when the VIX, the volatility index, is approaching 30, right? I mean, this is when it's getting a little bit too crazy, and
You
it
lay
might
off.
make sense to just stay back for a few days. I mean, right now the VIX is pretty low. Today we're back to 15. Last couple of days we have been at 20. I think these are healthy levels. This is what we see. Even if we go up to 25, I think this is great, right? Gives us a little bit more premium, gives us usually a little bit of the market pulling back. But when we get to the 30 handle here, that's where I just grab some popcorn and then watch what's going on.
Yep.
You definitely have like risk on, I don't know if anyone can see my fingers. I'm doing this risk on, risk off environments or whatever, definitely. Or no? Yeah, of course. Yeah. Okay. So yeah, I mean, that's another thing I think that's another important thing most people don't really get unless you trade a lot. I think it's clear you need to have risk off times. You know what I mean? And you know what it is. It's like there's a hurricane coming. Oh, I'm going sailing. You know what I mean? Right?
Yeah.
Exactly. Right. All right. So, any thoughts, Jay? Sorry, I know you want to say something.
Discipline is very, very, very tight with that. You don't always have to feel like you need to be in a position. You don't always have to be trading. Sometimes it's best to have no position.
Exactly.
Cash is still
Exactly.
a
All right.
conservative
Yeah.
position.
Yeah. Doing nothing is often doing something. I always say.
Right.
All right. Last one, and then we'll just then I got one more thing. So we've probably talked about this, and we've just hit on this, but any other? What are the top mindset mistakes you see rookies making? We've kind of hit on this. Anything to add, Marcus? Any of your guys that come in, what's their biggest mistake?
It's usually getting greedy, right? I mean,
Right.
it's just like, oh my gosh, this is a surefire opportunity, and I did it in the beginning, right? I mean, this is where when I started trading options, buying options, I thought, oh my gosh, this is great. I buy it for 10 cents, I sell it for $2, right? I mean, what can possibly go wrong? And I just lose the 10 cents. And this is where I realized I lose the 10 cents a lot, and I don't make the $2 ever. So I think it's really unrealistic expectations. And you see, when we are talking here about returns of around 30% a year, there's people who are looking at us right now and say, oh my gosh, look at these old farts. I do this in a day, right?
Yeah,
Right.
I was one of those guys for a short time.
Right.
I know.
Yeah,
and
right.
It might work for a short time, and then you blow out your account, and then you just have more realistic expectations. And this is where you also realize slow and steady wins the race, because this whole compounding thing, it's a real thing. It works, right?
That's
but
funny.
in the
We talk
beginning-
about that too.
Yeah, but this were also, I think many traders are undercapitalized. Yeah, I mean, I started with $50. You started with $50. I would never advise anybody to do this, right? Because
Right.
if you start with less than 10,000, to be honest, and
Right.
you're looking for 30%, I mean, on $10,000 account, that's $3,000. That's what, $150 a month. Now,
Right.
that's good money. You cannot live on this, but if you do it with $1,000, yeah, you're making $300 a year, which is like
Right.
$15 a month. You might as well drive an Uber or flip burgers. I mean, you make more
Right.
money doing
No,
that
exactly.
than trading. So this is where I think the two things is being undercapitalized, and because of this, being greedy and therefore too aggressive.
Right. Yeah. Anything else, Jack?
There's sometimes where I've had some positions that were, I sometimes am known to get into small stocks and let them run in a trend, like I did with Open last year. I mean, that was insane. It went from like 80 cents on up to $10. And at the top, I didn't get greedy. I wanted out, so I sold into money calls at the top of that one.
All right.
Yeah, but
So-
here's the deal. For you, it was not all chips in, right?
Right,
You
no,
didn't
it was-
bet your
it was a
whole
small
account on a small stock, hopefully exploding.
Right.
I mean,
Yeah. I mean, it was
Right.
roughly 3% of my portfolio at most ever.
So-
So
So let's talk about the important stuff here now, right? So it says I read your biography, and it said that you like to grill tomahawk steaks, right? That's what it says. I wrote it down. You're a man after our own, mine and Jay's heart over here. So let's talk about that a little bit. Let's talk about the
I
tomahawk
live in
steaks,
Texas,
and I'm going to
and
send
I
you my
love living in
address. You
Texas.
can-
I
you
love
know, a
grilling.
box.
I love barbecuing. I just like the attitude here. So yes, and I have a Traeger, and a Weber, and a green egg, and so a little bit of everything. That's one of the things I really enjoy.
So I have a Traeger. I'm like addicted to it. Like I used it last night. Like I hate lamb, but my wife loves it. And I put some lamb chops in there, dude, and she said it was like sick. I mean, I don't really like lamb, but dude, you put like a regular like piece of like meat in there, and you like a couple hours. It's just insane, It's insane. You're a man after our own heart.
I
So,
love it.
one more question on the tomahawk steaks. I know, just so do you actually like where do you buy those? Do you go to like a Whole Foods, or do you have like a special place like a butcher, or do you have like a main guy? Like sometimes you can get those big ones. I mean, where do you go
Yeah.
where do you go buy those?
I wish I had a really good butcher close by, but we in Texas have here the HEB stores, and they're pretty good. They're not quite on Whole Foods level. They're a little bit more affordable, but they have all
All
the
right.
foods and
Yeah, I mean the Whole Foods are pretty expensive. I've tried them. It's just a lot for that, I find, I mean, especially if you have kids, if you're just doing it for you and your friend and you're trying to be cool, but your kids don't know it came on like a tomahawk, right?
Whole Foods used to be $100 per bag that you carried out. Now it's $200 per bag,
Yep.
and it
Is
just
that
works
it?
every single time. You have two bags, it's $300 to $400. It's
My
so expensive.
goodness. Yeah, I mean, wow. Protein's gotten, meat or whatever, obviously protein, but meat's gotten really expensive. No.
Yeah.
All right.
There's certain things I'll buy there, but I try to avoid those, really expensive stores.
Yeah,
I know
okay,
where to
so
find some good meat for reasonable prices too. So
yeah, I mean it's hard these days. So, all right, Marcus, awesome stuff. Jay, you want to pull him up again where we can find him one more time? This is
Got
YouTube website. Probably start there.
Yeah.
Good
is great.
content, solid stuff. Educational. Look, I've looked at a handful of these.
I got the YouTube channel up here. Lots of informational videos on deck.
Yeah, you're blocking the link with your little pointer, though. Oh, yeah. So that doesn't really matter. Yeah, but it's at Rockwell Trading Services. There it is, bro. All right, cool.
Yeah, it's
All right,
Rockwell
Marcus.
Trading. If you look on YouTube for Rockwell Trading, or if you're ambitious and want to try to spell my name, you definitely come up.
I copy pasted it.
Not to be weird, but like I asked my wife, because again she's German. Her last name was Heisman, right? When she grew up. So I asked her, what does Heitkoetter mean? Does Heitkoetter mean something, or I mean,
Well,
I'm just curious.
it's a super old name, but going back to the 16th century. So Kotter, the last part, is an old word for farmer. And
I see.
Heid is a part of Germany, so it's a certain region. So it's kind of
sweet.
the farmer from the Heide, which
glad
is
I asked.
middle of Germany. Yeah, so that's the root of the name.
Sweet. All right. Thank you, sir.
Mine's Dutch, and it just translates to Freeland. So the way
right.
most people tend to say it when I try to spell it.
So it's Jeremiah Freeland, huh? Is that it, bud?
Yeah, that's the way it would pronounce.
All
or
right.
the way it would translate.
All right. Thanks, Marcus. Thanks, Jeremy. Appreciate it.
Thank
See you
you.
guys.
Great
Have a good
show.
day.
Great seeing you guys. Have a good one.